Hello, everyone. This is Noah and John, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply, came in at 71.46. Show me the chart.
So that's a tick down from last week. Supply again, I honestly did not think we'd see a decrease in supply on a week-to-week level, but there we have it. But honestly, no, when you look at the year over year, that's up roughly 10% from where we were a year ago. So things are coming onto the market.
Yeah, I did not think we'll be declining. I thought we'd be going up right now. Year over year is kind of muzzled for me because of last year there was no seasonality. Even though February, I guess you can argue it didn't really start yet. But yeah, it's not a function of stuff not coming on. It's something else going on here. Let's see if we can dig down and find it today. Let's move on to pending sales, Manhattan measure of demand. It came in at 35.82. Johnny, show me the chart.
So pending sales just continues to improve. That's up 4% from last week. And again, on that year over year basis. And you're right, the seasonality comparisons are ending fast by mid-March. They'll be totally gone. But hey,
Right.
we're still in it, so we can compare. And it's 42% higher than last year. That's something.
Unbelievable. The market is just seeing a surge in demand. I'm hearing there's a lot of contracts still out yet to hit the pipeline. So I don't see this falling that much, but let's transfer to the dashboard. Let's go to the weeklies and let's see if that pace is maintaining. Johnny, I'm looking at supply. 338 things came on the market. Is that good or bad? Show me the chart.
Well, it's up. It's up about 5% from last week, and that's up 3% from the year before. So, when you talk about the function of this market and it looks really strong, it's really not. It's not to do with things not coming on the market. Things are coming on the market, and we're going to dig into that in just a second. It's really just a question of things going into contract, and let's dig into that next.
Yeah, let's move right down the contract sign. 1 week Manhattan contract sign looks like 272. I remember that was over 300 last week, which was amazing. That's still strong, but down. Show me the chart.
Yeah, I mean, it's down from last week, and I'm gonna, pull the retail sales excuse and say that we had a holiday this week for President's Day. But the
Right.
story continues on contract signs, just the year over year on a weekly basis. That's 46% higher than this week last year. Stunning.
Yeah, and I mean, if you want to just figure out what's going on in a 30-day pace, because we are mid-month, and look at 1 month, and let's dissect this, and let's take a look at whether or not there are things coming on. And when I see supply, I see 1482, so we're just under 1500. When I see contract signed, I see 1167. So I mean, there is stuff coming on. It's hard to have a frame of reference without understanding what's normal for February, John.
Yeah.
Okay. So for that, let's go back to the chart room. I'm going to scroll down and I'm going to look at monthly new supply. Okay. And I'm going to go ahead and I'm going to go look at what February is used to seeing. And when I hover over February and I look at all these numbers, 1300 or so looks about the middle of that range.
Yep.
And if there's 1482 things coming on in a 30-day pace based on my ticker, we're seeing more stuff come on. In fact, that's going to be the second most stuff that comes in the market in the last 9 years.
Yep.
Let's go to contract signed, right? We saw 1,100 contracts signed. I'm going back to my chart room. I'm going to go to monthly contract activity. All right. Is 1,120? Is that a lot? Is that a little? I hover over February. That looks like around 900. So I think that is our answer right over there, John. What do you see when you see this?
I think you're right. I think 900 is the normal for February. But no, I'd like to draw your attention to the switch to seasonal button that we added in, because that's just awesome.
What is this right here? Hat tip to Jared Anton over at Elegron. This is an amazing little feature. We just added it yesterday. And if you want to look at this monthly contract activity in a different way, you just click on this right over here. And what it's doing is it's showing you the blue line is the 9-year seasonal average. So you could see what is the norm and where should we be in a linear fashion. And then we posted the 12 months, the last 12 months in orange to show you whether or not we're pacing with seasonality or whether or not we're pacing below seasonality. And John, what do you see when you see here?
Well, you can clearly see that normally it looks like October to January you kind of decrease, and we start ticking up again February to March, April, May, as the busy season really gets underway. But I mean, look at the trend from May, June, July. I mean, the contract activity has just basically just been slowly increasing. I mean, granted, it went from nothing to something, but wow. And we're way over the pace, and we still have the usual best months ahead of us.
Yeah, it's really a nice view to take a look at this. It's a different view to take a look at this. It takes a little getting used to, but check this out and it will make sense over time. Excellent little tool. All right, John. We're going to go to another chart outside of UrbanDigs. I want you to please introduce this chart to our audience. What are we
Also,
looking at?
normally we talk about listing discount, the days on market. So this time we're going to flip that around and talk about, well, let's talk about how much a seller is going to keep of their asking price based on the days on market. So we looked at a standard, listing agreement, 6 months, and kind of broke it up into three buckets: less than 60 days, 60 to 100 days, and then over 120 days. And the results are really interesting, as you can see.
Yeah, and I mean, if I think about the majority of deals that probably close, right? We have days on market and we have the negotiability percentages there. I would think majority of them are going to be over 60 days. So like when you think about where the market is, because in reality, the market doesn't all sell below 0 in 60 days. I mean, as much as sellers would like to think that they're going to sell it, there's a lot of aspirational listings out there. Sellers have a hopeful price. They want to test the market. Brokers are telling them not to. This is why. All right, sellers out there that are not understanding, brokers are trying to tell you, if we could get the pricing correct and somehow find the market and get a bid within the first 2 months, the negotiability, the percentage of the ask that you're going to get is going to be a lot higher than if we fail at finding that right price. And this is the ramifications, John.
Yeah. And what's interesting is you look at 2015, 2016, sort of the peak of the market, when if the median on less than 60 days was 100%. So if you priced it right, you were getting your full asking price, no ifs, ands, or buts. And if you priced a little bit higher, all right, you're taking an 8% haircut. You're getting a 92% of your ask. But that's because the market was just that rising tide lifted all boats. You can
Right.
see that is no longer the case. So even though we were just talking about that incessant demand and constant increase in contract activity, if you
Right.
are aspirationally priced, if you are priced outside of the market right now, you are taking the biggest haircut you have in many, many years right now.
That's true. I mean, the market is liquid. There is demand. We just showed you in this show what's going on in terms of demand. Listen to the advice. Meet the market where it is. Thank you, John Walker, for putting all those things together. I am Noah Rosenblatt. We're both from UrbanDigs. Do not forget to look at our forum. You got questions. We got answers. We wish you both, everyone, a happy weekend, and we'll catch you next week.